Good evening, Peter. So is this what we're going to see? You think this is the trend? Because most people out there believe that it's you can't be bearish on the stock markets right now, not with the kind of liquidity that is out there, not with what you're seeing on stock markets, on Wall Street and all of that. So is this what you're expecting, a bit of like a seesaw movement for the next couple of days?
Well, I think the reason why we're having a pretty strong market today is because finally it looks as though the Nasdaq has taken the lead. And as you know, that Nasdaq yesterday was down about 10%. So that basically indicates to me that the pullback that we had is probably pretty much over. And of course, a lot depends on what happens with yields going forward. But I also believe that we're not actually over with the rise in yields just yet, but I don't think we go above the highs of last week. That is a 10-year. I don't think we see it go much beyond 161 or 162. In fact, we have Treasury auctions this week, and the 10-year is going to be in the spotlight. So a lot depends what happens with the auction. If the auction goes well, then I think it's safe to say that, rates will probably, yields will probably just hang around these levels. If there should be a hiccup in the Treasury auction, then there's a possibility with the combination of inflation data this week, which is going to show more inflation, then we could take another trip north of where we are now. But I don't think I don't think we make new 52-week highs. So basically, I think the market is getting pretty much near to the point where it has factored in yields at these levels.
This is Ruchi Bhatia. Given the fact that the U.S. President Joe Biden is all set to sign off the $1.9 trillion coronavirus relief package as well, the stimulus bill as well, how hopeful are you of course, economic recovery and the fact that once again we will see a lot of interest coming in with respect to stocks that are associated with the economic turnaround, whether it is aviation, banks, cruise liners?
Absolutely. I mean, if you look around what's been happening here ever since the second stimulus bill, actually the third stimulus bill, has gotten, closer and closer to Biden putting his signature on it, you see that the market is telling us that within the next 2 or 3 months that probably the economy is going to be pretty much fully open. And with 18% of the population having already been haven't already been received the vaccination, it's obviously that we could see that number go to 25-30% within the next few months, and that's good news for the economy. And besides, the spending. The amount of spending that the government is embarking on is going to push economic growth in the third and fourth quarter close to maybe 5.5% to 6% on an average, and that just simply means that it's going to give a boost to the global economy as well. So we're very optimistic that the economy is shortly going to open, and when it does, we're going to see a boom in economic activity. Now, a lot of that is already priced in, but again, even if interest rates stay around these levels, they're still, in nominal terms, very low, and so equities still look attractive.
Equities look attractive, and today is looking particularly more attractive thanks again to the bond yields ebbing off. Thanks a lot, Peter, for joining us live on this Tuesday's edition of India Tonight. It's always a pleasure talking to you.